Welcome back, everybody, to this week's installment of the Weekly Market Review. And just want to take a moment to remind you to hit the like button and subscribe to the channel. Share the video with somebody if you find that this video was helpful. You can also follow me on Twitter at Mr. J. Thomason. I'm pretty active there. You can also follow my weekly newsletter on Substack at befinanciallyfree.substack.com. The links to both of those are in the description of the video below. A lot of what I do on, I think it would be a good idea for me to just mention, a lot of what I do on Twitter is qualitative, meaning I share a lot of my opinions and my views, whereas on Substack it's a lot more quantitative. It's a lot more, I'm looking at what my systematic my various systems that I've built are telling me about where the markets are at. And so there's a little bit for everybody. And then, of course, in these videos, it's kind of a knee-jerk reaction, real-time, qualitative view about what's happening in the markets over the last week. So there's a little bit of everything for everybody depending on what you want. So hopefully you find these videos helpful. And again, don't forget to hit the like button on that video below. So let's take a look at the S&P 500 first. So we've had a pretty good sized correction, not super huge. We're sitting at about a little over 5% now. It looked like we were on the way to a rebound. Obviously, one of the big stories this week was the Nvidia earnings, where we saw. I should change the candles just for a second. Where we saw just a huge blowout earnings beat. I think it was like 20% above. I think on TradingView they show you, like over 20% beats, almost 30% beat on one of them. Just continuing to rock. And what was interesting is yesterday, over in the after hours trading, we were up like 7% or 8%, and then opened kind of about 6-ish%, 6.5% on Thursday morning, and then kind of just ended up giving it all back over the course of the day. I mean, it only closed up 47 cents after having been up over $500 on the open. So it's a pretty big tell that the market. I mean, it appears to suggest that the market, at least for Nvidia, is just overextended. But obviously that is, and I have my regular candles on now, but that's obviously been the big story. And then obviously today we had Chair Powell speak at Jackson Hole, the symposium put on by the Kansas City Fed this morning. And the markets kind of were a little funky throughout the period. Let me just fix a few things here. So Powell spoke right at 7:02 is when he started speaking. Got a little spike, got a little dip, got another big spike. Price went down, and then about 8 o'clock, price started to rebound, and and it just rebounded all throughout the day, and we ended up on the day obviously over 0.5% on the S&P, about 0.75% on the Nasdaq. One of the things that I tweeted, and I don't even know if I have it up here, one of the things I tweeted was that nothing changed in any material way. I posted that after Powell's presser ended. He basically just continued to reiterate what he has been saying this whole time, that inflation is high and that they're going to keep at it until the job is done. And I feel like with that backdrop, without anything extra hawkish, I mean, like it's possible that the markets have been expecting too much as it relates to a pause or a pivot, but it without any like material change to what he's been saying, it's hard to see anything that could really break the trend. There wasn't any surprise like, oh, we're definitely going to hike another 100 bips or something like that, and there wasn't anything dovish either. And I think that on balance, a lot of what I was hearing this morning and seeing on the interwebs on the news stations was how hawkish his presser was. And so the fact that the presser was so hawkish but assets ended still up suggests that the trend momentum is still really to the upside. So even though we've had these this pullback, it's not anything that, it doesn't appear to me to be looking to break anytime soon. So as far as levels go on the S&P, we're in that zone that I've referred to before. We're in between 4,300 and 4,400, generally about that area, where the tide line and control line is usually a good buy spot. And if price dips below the control line, just the faded gray line, then that's usually an even better spot to buy when tide is bullish. So colored line above the gray line, that means bullish tide. And we still have this trend line on the S&P intact. One other trend line that I've been seeing is something like something like that. I'm not sure that I buy that one. It doesn't really work. But some people have been looking at that and saying like, oh, we're right on support. I think we still have a ways to go before this becomes an issue. Let's see if this works. I know I've been looking at this, trying to look and see if I could line this up. You could make the case that this is a channel, so we still have a lot to go there. I think the danger spot is going to be if price falls below, we get below 4,300, that's cautionary, but as long as we stay above this trend line, so above 4,200, between 42 and 4250, as long as we don't break that, then we're still doing pretty well. I think one thing that I wanted to, oops, I'm bringing up the wrong thing here. One thing, we'll take a look at the positioning in just a second. Let's see if I can find this. Here we go. I have to update the text on this slide, so let's not pay attention to that right now. But what I wanted to point out here is the percentile rankings of bulls and bears according to the American Association of Individual Investors. So we've seen a pretty precipitous drop in percentile ranking of bullish and in this case neutral, while seeing a pretty high move in bearish sentiment. And so obviously sentiment is not everything. You can't always go off of what people feel or what people say, but you have to also watch what people do. And so it's very interesting to see the bearish at a 72nd percentile, and then the spread between bulls and bears at the 29th percentile. In fact, when you look at it on a raw number basis, the spread between bulls and bears as far as sentiment goes is actually in the negative. So that's really interesting. I think it would be helpful to think about that. And so I think we're in a place where unless something materially changes, we start to see some decay in the economic data, which we're not really seeing. I know a lot of people are making some noise about jobless claims being revised and being concerned about that. But in my opinion, it doesn't really look at all like there's anything that would change the trajectory of the trend. And of course, this is, I understandably had tried a couple of times to say, oh, correction is coming. And I think this is the correction that I was looking for. It just happened, later than I thought. And so I've had to learn and adjust and grow from that. But I've been writing just to mention my newsletter again, I've been writing about how this correction is going to fool people, because people who have been super bearish for all of 2023, and that includes me. I've been pretty bearish quite a bit this year, but that when the price corrects finally, people are going to get very bearish very quickly, and it feels like that's kind of happened. I'm already seeing people talking about credit event. I'm seeing people talk about crash. Obviously the bull bear spread and sentiment is low. If you pull, I'm going to pull up my flows chart really quick. If you look at flows, equity flows estimated through July and then through through August so far are continuing to trend down. So after having a positive month of June, it looks like equity flows are headed back to the downside. And so, I feel pretty confident that this is people are getting too bearish too quickly, because it's not likely that the crowd is all right and that the crowd knows what's going to happen when it's going to happen. So this is why I'm really looking at this area to find evidence of a durable bottom to buy. So one of the ways that I look at that, and I talk about this in my newsletter quite a bit, is using my risk overlays, which will uses a couple of different signals together to find bullish and neutral and bearish trends. And it does a pretty good job over the course of time at picking the spots where you need to be in the market fully and where you need to be getting out of the market or cautious. And right now it's flashing the bearish signal, and so it's not really safe to jump in at this point. And so if we can get kind of an extended or maybe a couple of yellow bars again after having some red, and then maybe get to some green bars, then obviously that's going to suggest that the momentum is coming back and that the probability of positive price movement is coming back. So looking at the NASDAQ closed above its tide line. So as far as I can tell, it doesn't appear to me that price is going to make contact with this yellow box. We were really close. Maybe you guys remember I put this yellow box in during one of my videos. It got so close to it but didn't quite touch it. I think we were, what were we? We were 9.25 away from 9.25 points away from touching the box. So that was almost a perfect touch there. But that's the spot that I was watching. We'll see what happens next week. We'll see if price can continue to the upside. I just feel like people are getting too bearish too quickly. So what I'll be watching is this trend line, which right now this trend line support is coming in at about 14,620. So you'll want to watch that spot. But as long as the tide remains bullish, then this is going to generally be a high probability entry point. And so I just want to call that out. Take a look at the Russell, which is actually has bullish tide and is technically in the prime buy zone, but the momentum is not really there. It looks like it wants to come off further. And again, you guys might remember if you watched the last couple videos, I had put this line in, and so I'm watching this as a support level. You can see it was resistance and then was support. I would watch that first, but then definitely the most important thing is the lower trend line of the channel, which right now is coming in at 1758-ish. So there's still, the Russell's prone to going sideways while the other indices are moving. So that's something that you want to definitely be aware of. The dollar, I want to point out the dollar because we're getting actually really close to a potential tide cross, and that is bad news bears for asset markets. So I think despite the fact that I feel personally pretty near-term bullish as far as it relates to asset or equity markets, because I think bears are getting too bearish at the wrong time. This is the part that I think throws the wrench in that outlook. Because if the dollar does get a tide cross and continues to the upside, tide crosses on the dollar are pretty powerful signals. Whenever that has happened, that's been, the big trend change across time. So a tide cross would be a really, really big deal. We've already, we haven't quite. We are kind of poking around this overhead resistance level, the highs from May and June. If we are able to get above and close above substantially, then it would all but guarantee a tide cross. And so got to watch out for King Dollar here. The other thing I wanted to look at, Treasury yields, which we did get that pop above the previous high from back in October last year. We closed above it, and the yield has kind of come off a little bit, but not too much. It's very strong momentum to the upside, and if you remember, if you've watched my channel for a long time, you know that I've talked about this a lot, that when the yield momentum is strong, it can move fast. And so I think that's a risk that market participants are not concerned enough about, is the potential for this to go up to 4.5% or even close to 5% very, very, very quickly. And then gold, a lot of people have been getting excited about gold the last few days, but as far as I'm concerned, this is not in a good position. There's still some hope for gold to redeem itself and get back above its tide line, but without some substantial price action to the upside over the next week or two, like I think we're going to get the bearish tide cross, and that would probably imply that gold goes to revisit 1800 or somewhere around or close to that level. And I think that's something investors should be aware of. So I have these trend lines I'm just watching just in case. Maybe this is a wedge, I don't know. I just want to be aware of it. And then crude oil. It's interesting when you look at, let me see if I can pull this up. When you look at the positioning in crude oil, if you follow my mouse, you can see that crude oil is where my mouse is kind of spinning. And crude oil right now has pretty strong positioning. And so I think that's something I want to be aware of, because a lot of people, how can I say, kind of twisting my words here. I said that I would try to be a buyer around this level because I was looking for, now that we got the bullish tide cross, I was looking for tide to touch the tide line, and it did. So I feel really good about that. In fact, we got a touch barely below 78, which is exactly where I said I would start to become a buyer. But the positioning is concerning to me now because, like if in the next week we get a good, reading from, oil inventories or gas inventories or things like that, or we get some positive oil news and then price doesn't move, then that's going to be a sign that things are not actually good under the hood positioning wise. It does concern me when everybody is piling into a position. It does make me think that it's not a good idea to go into the position, but of course I have to use my judgment along with my quantitative signals to make those decisions. So right now it's enter with caution, as you can see from the color of the candles, but that could change at any point. So but I do want to call that out. And then finally on Bitcoin, I want to look at Bitcoin. Let's look at the Bitcoin futures actually, because the Bitcoin futures are actually oversold from the perspective of. Let me see if I can get this pulled up. Let's see. Sorry, I'm trying to do all these things in real time. There we go. So Bitcoin is the BITO ETF, the futures ETF, is oversold. You can see it down here from the perspective of my tech signal scatter plot. And so that implies that, maybe this downside price action, this little waterfall that happened, which really happened on a news event, which was, Elon Musk's SpaceX selling their holdings of Bitcoin. It appears that price is stabilizing here, and it might actually be an appropriate time to go long. In this, at least on a tactical bounce basis, we still haven't taken out the June low, the swing low from June. So as long as we stay above that, then price theoretically still has room to go to the upside. But you do definitely want to be aware of the potential for a bearish tide cross if we get too much price action to the downside. So that's something else to be aware of as well. And in terms of, let me go back to my positioning chart. A couple of things that I want to point out. I've been talking lately on Twitter about how to me it seems like a big deal that because a lot of people have been posting the charts of the net speculator positioning in treasuries, and of course it is very low. It is at extremes in the lower quartile of the time series as far as positioning goes. But the problem with that is that smaller traders, like the unreportable positions from the Commitment of Traders report, shows that small traders are super long. And I mean, especially on the 10-year, the 92nd percentile long on 10-year treasuries. And so to me, that screams, like, especially the smaller traders, like that screams, don't get involved. And then what else is interesting is on positioning. Bitcoin is now in an extreme, as far as small traders go, is in an extreme short. It's in the 11th percentile on its time series. But then large speculator positioning is in the 99th percentile. And what was interesting is that, and I don't have the chart on me available, but what I did a study on the Bitcoin's price history along with the CFTC Commitment of Traders report in Bitcoin futures. And in its existence, there was a time where the smaller speculators were always on the wrong side. But then now we're at the point where basically since 2020, the small speculators have actually been more on the right side of the price moves, whereas the larger speculators have a tendency to be on the wrong side. So that's a really interesting dynamic. And so I'm not really sure what to make of that at this point, but it is something I want to be aware of because of what I said about that BITO position being oversold. If positioning is any indication in the history or the recent history of Bitcoin futures positioning is any indication, then this may actually not be something to buy on the dip here. So it is something that you want to be aware of. And with that, I think I'll stop there. Again, don't forget to hit the like button and subscribe, and make sure that you go check out my Twitter account and check out my newsletter. My newsletter, the first half is free. The second half, you need to have a monthly premium subscription, but you can also try it out for 7 days. So I'd encourage you guys to try it out and see if it works for you. Hope you have a great day and a great weekend, and I'll see you guys next time.